Multifamily Mindset
podcast. Think bigger.
Welcome back to another episode of the Multifamily Mindset podcast. I'm your host, Zach Rucker, co-founder of Black Cedar Investments and coach here at the Multifamily Mindset. For those just joining us, welcome aboard. We are thrilled to have you join our growing community. Here at the Multifamily Mindset podcast, we deliver fresh content twice a week, keeping you engaged and inspired. Every Tuesday, we dive into insightful interviews with students from the MFM network, showcasing their journeys and lessons learned. Then on Thursdays, our mindset mentor, my friend Dallas Pruitt, unpacks the powerful mindset principles gleaned from these student stories. And that's not all. Wednesdays are reserved for another fantastic podcast, Own the Outcome, hosted by Tyler Devereux, the founder and CEO of Multifamily Mindset. Tyler sits down with high-level individuals exploring their path to success and extracting invaluable wisdom along the way. So whether you're here for the wealth of knowledge, the inspiring stories, or the expert insights, you're in the right place. Welcome to the Multifamily Mindset podcast. Let's dive in. I'm excited today because for those that listened to last week, we have Lenny's partner, Chad Brinkerhuff from Great Dane Capital, to hear his side of the story as we all have different experiences in this journey of multifamily and entrepreneurship. So it's awesome that we have these two episodes of the same partnership, but we get them talk to them individually. So with that, Chad, thank you for joining us and our listeners today.
Thank you, Zach. I appreciate the opportunity.
Yeah, I'm so excited today, and our listeners, you guys are going to take away a lot. So first, Chad, let's just answer the question: Who is Chad? Provide just a brief kind of backstory of yourself.
Sure. I grew up in Michigan and got my degree in landscape horticulture, and very quickly had to pivot because that whole industry changed. Went to Hawaii to get my graduate degree. That industry shifted and had to do another pivot. But I have done a lot of different things across the country, and literally from Florida to Hawaii, and I've lived in, I think, 6 states now. So have a lot of different exposure. Yeah.
That's awesome. That's great. So what, learning landscape, and then what kind of brought you into multifamily? You guys, for those that didn't listen to last week, Chad, you and Lenny have been part of the multifamily network for almost 2 years now, 22 months.
Yep.
What, your journey through that, what brought you into multifamily?
Yeah, actually, it was interesting because I think Lenny had mentioned before that we were trying to start a business in Hawaii, and Big Island is very rural, and Lenny is more urban. And so he wanted to have some more place to get away. And so I started to look at multifamily properties on Oahu near Waikiki, and calculated that we needed something between 10 and 14 units to do the house hack in Hawaii. And it was approachable. But that's how we got started, because right after we started looking at that stuff, then Tyler started showing up in my Instagram and Facebook feeds, and the rest is kind of history. We've gone from there, and we changed routes and moved towards this because we saw how much more scalable this could be. So
that's awesome. Oh, that's sweet. Awesome. So, with that, you guys closed your first property towards the end of last year.
Yep.
Right. And, something that I've learned from you and talking to you is you pick up on trends pretty quickly. And so I want to dive in for our listeners, how are you able to recognize trends early? And maybe let's just dive into that first. How do you recognize trends when you're looking at your property, managing your property? Let's go from there.
Sure. So when you're looking at a market or anything like that, you just kind of have to see where new businesses are moving to, what the path of progress is going to be in that area, and any kind of movement of the population, right? If you're losing population, that's probably not the best location to invest in. If you see a new company coming in, there's going to be new jobs. But you also need to make sure they're good paying jobs, right? Because if it's minimum wage jobs, it's not going to help you very much. But if it's actually good paying job that's coming there, and it's not the only major employer there, then that's a really good opportunity for that. When you're looking at your properties, you want to be able to see how the tenants are responding to what's going on, right? You all of a sudden having significant amount of move outs, then that's something you need to address with property management, because there should be a reason for those move outs, and hopefully they're acquiring those, because that should be part of your exit for any tenant, is to ask them why they're leaving, right? Because if it's something you can fix, you can maybe keep them, or you can at least not lose more people if it's something that's there on the property. So, but you have to watch bills. You have to see where the energy trends are going, right? If you're spending too much on utilities, if all of a sudden you have a big jump in your water and no one's reported a leak, you probably have a leak underground. So you have to look for things like that. And a lot of people don't recognize that very quickly. For me, I'm very particular about numbers and seeing what is going on, and I'm able to recognize patterns of movement pretty quickly. So it was very nice to see that Neil Bawa named two of the three cities that I had already been focusing on as his number one picks. So that was really good to know that someone who does statistics all the time agreed with what my gut was telling me and what I was seeing.
Okay, that's awesome. So what were those cities?
Sure. The two major MSAs were, one was Grand Rapids, Michigan. And I knew that there was a lot of industry moving there. And being from Michigan, I know Grand Rapids is a pretty incredible city all on its own. It's got one of the best hospital systems that's based there. They've got a school, university there. There's a lot of new technology based companies that are coming just south of there. And Michigan has very good school systems, and they've got a great infrastructure. They're prepared for weather. You don't ever have to worry about the freezes like you do in Texas and Oklahoma, because it freezes there every year.
Always prepared. Yeah.
Yeah, yeah. And actually, most people don't know this, but Michigan matches California earthquake codes in their building codes, and has, as long as I've known, probably back into the 1900s, because Michigan has a fault line that runs up right through the middle of it. So it's an advantage. The buildings are built more structurally sound, better insulated, far less issues. And I've, as far as I know, it's been red state longer than it's been a blue state. And so it's a very purple state. And while it may have some tenant friendly laws, if you understand the eviction process in that city or wherever you're at in Michigan, and you become the expert, it's a great opportunity, because there's so much there. And it's so close to just going around the curve to Chicago.
Yeah.
So a lot of people actually commute over there for
Wow.
jobs, and maybe not all the way up to Grand Rapids, but along that whole coast there's a lot of really nice neighborhoods and communities. So,
Yeah. Well,
and then
that's awesome. And sorry to cut you off there, but
that's good.
to highlight the point of, even though there's some tenant friendly laws, and this is something I advocate a lot, is you can invest anywhere. You just need to understand your risks and
Yes.
maybe how difficult you have to work around that. And then you just weigh in those assets, or whatever you're buying, those deals, and you just need to understand those risks that you're taking to be able to tackle those. A lot of people, you guys, you're in Florida or you're in California, and a lot of people would say, "Oh, don't invest in California." However, there's people investing there, and
Right.
it can be done. You just need to understand what you're dealing with, and then make
Right.
sure you approach the investment. So it might be a little different strategy, but
Right.
I love how you pointed that out with Michigan. Is there's still a lot of great opportunities there. You just need to
Yes.
understand your market.
Right, right. And that's a lot of the market research, right? And I tell students when I talk to them, anytime they're interested in investing in their own backyard or something, that the best thing they can do is be the expert. So that a sponsor,
Yes.
while they may not be investing in that space currently, if you can show them that you're the expert on those tenant laws and on the eviction process and anything that you need to know that would make a difference on that property, there's where you're adding value, right? Especially as a student. And so I know someone personally that only invests in Los Angeles, one of the hardest markets in the country.
Wow.
And he loves it because whenever he buys a property, there's maybe one other LOI rather than most of the red states where there are 30 LOIs.
That's a good point.
So
Yeah.
Yeah. So, and when finding sponsors, if you can't find a sponsor within our network that's interested in investing in your backyard, I also give them the advice, go to local real estate events. Find the people who own the properties that are near where you live and see if they're interested in sponsoring,
Yes.
because they may be, right? Because the fact that they recognize the profitability in their space, and they're also the expert in their space. So you can learn a lot from them.
Yeah, no, exactly.
Yeah.
And to clarify for those maybe that are new, like sponsor is someone that can come in, has a net worth, experience, liquidity to be able to sign on these large commercial loans, especially in Los Angeles, the prices that you're dealing with there, right, in California. So,
Much higher.
yeah, that's a really good point. So, talking about Michigan and markets that you've been looking at, and we talked about Neil Bawa, who's big on the data piece. What do you have some resources that you use that help you kind of navigate and know what markets to be looking at?
So for myself, I actually have a pretty good, because I've lived all over the country, I have a pretty good understanding of a lot of the major MSAs and what's going on. And so I try to find resources that give me what's coming as far as new businesses, right? And major manufacturers and things like that that are going to bring a lot of jobs, because it's not just those jobs. If it's a large population that's going to be a new hire, because unfortunately, they don't typically hire from the people who are local. They tend to
Mm,
bring people in from outside, but the advantage of that is other businesses start to boom and grow. So they
yeah.
they have support businesses that go in underneath of that. So if you're looking at B and C class value adds, that's where a lot of those people are going to land.
Yeah.
Because most of the people coming there, especially if it's a tech job, are not going to live in a B and C property. They're going to want an A property or their own home or a rental home, right?
Mm,
But they're going to still add to that depending on what their income is in that space. Some of them may choose that, may choose the value add space, but it's not. I don't believe that that's the direct path of progress for that. It's usually new build, new construction, where they end up going. And the other property that I should say the other city that I was thinking of too, that Neil also agrees is really good, is Raleigh, North Carolina.
okay. Yeah.
Yeah.
Great
I've
market.
actually been very favor of Raleigh since I was in college. So that's been
Mm.
a while.
I mean,
So
it's been a good market for a very long time.
and it will
Yeah.
continue to be, because the fact that it's supported by multiple universities in the Research Triangle. You got Raleigh, Durham,
Yeah.
and Chapel Hill. You've got three major universities there, huge hospital systems. You've got a major research park. I mean, there's just good money there and lots of property. So
Yeah. No. Yeah. Definitely great markets there. So, kind of moving over and this, I'm big on underwriting. I'm big on analyzing deals. That's kind of what I focus on. What tips or tricks do you use to quickly analyze deals to see if they're even worth taking a deep dive? Because a lot of people ask me, "Hey, it takes me so long to analyze deals," and then I ask them, well, what checkpoints do you have? What things are you doing to make that process a little bit quicker? Um, because you don't need to take a deep dive. So what do you do to help save your time?
right. So the biggest factor I look at is vintage. Right. As soon as you're looking at something that's built in the 60s and 70s, unless the OM screams that they've replumbed it and rewired it, I'm likely not interested, because
Yeah.
the chances are it's way too big of a ticket price for the amount of capex that you're going to have to put into that property. So that's a big one for me right away. If it's within my 1980 and newer zone, okay, how old are the AC units? How old are the roofs on those properties? Because unfortunately, a lot of people in this industry, they do all the stuff, and I call it putting lipstick on a pig, right?
Yep.
They take a
Yeah.
property that's actually got a lot of capex that it needs, but they've all put it into making it pretty, and they don't put it into the functional stuff that you can't increase rents for, that can cost tens of thousands of dollars. And if they have not done that during their hold, you're going to have to. And if you don't do it during your hold time, the next buyer is going to expect you to. So you're
Yep.
going to pay for it one way or the other. So you either get a lower asking price for the, or you offer a lower price for the property, or you're going to get a lower price at the other end, because those are major capital expenditures that unfortunately a lot of syndicators have been ignoring for the last few years.
Oh yeah, that's definitely true for sure. So I would say like your big piece there when looking at deals was really your criteria. What you're
Yeah.
doing is you have a strict criteria of the types of properties you're looking for.
Yeah.
And from there, if it fits the vintage, okay, we're diving in deeper. How much is my capex going to be? Am I going to spend a lot on these items to fix them up? That doesn't give me the return on investment that I'm looking for.
Right.
Yeah, that's huge, and that definitely speeds up the process a lot faster than a broker sends me a deal. This is the deal. Like this is
Yeah.
going to work out. Oh, the next deal, this one's got to be it. I don't, that's a big
It's
piece to emphasize as criteria. Like setting your criteria straight at the beginning is going to
mhm.
make your process so much faster. Where you even have to look at the numbers.
Right. Right.
And
You
that's
don't.
you know you just
You
look
don't
at
have to
look
dig
at the
through that. You don't
property.
have to do that. You don't have to do all that data entry. You don't have to do all that. And let me rewind back a little bit. What I actually first do when I get a property is pull it up on Google Earth, because one
Yes.
of the nice parts about the satellite snapshot is you can get a feel for the neighborhood just on that alone. I've looked at properties for students that have sent me information that the property looks beautiful. The OM is beautiful. As soon as I pull it up on, because a good example is Houston. Houston has no zoning, right? So you can literally have an industrial park right next to a residential area. You can have a junkyard right across the street. Well, this property had a junkyard, a semi lot, all this
Oh
bad
man.
stuff within like nothing within a half a mile of the property was anything but industrial. So it was a beautiful property, but surrounded by a horrible area. So you don't want to go there. And I had another property where I was looking at where if you looked on Google Earth to the west, it was a beautiful B+A single family residential area. You go just a little bit to the east, and it was burned out homes, junk cars, all stuff you could actually see from Google, which, so you have to kind of look at that to get a good idea.
Yeah. No, that's a great tip is using Google Earth, Google Maps. And you can even do a time where you see what it was like years ago.
Yes.
And that even helps too, because then you can really see, okay, when was this renovated, truly renovated? It might say it was last year, but you look on it, it was actually, 3 years ago, 4 years ago, and you're like, okay, now this is stuff that's already getting outdated.
Right.
Maybe they finished their last renovation last year,
Mhm.
right? And the big pieces there. I was looking at one a few weeks back, and uh, there was fields next to this property, and then I looked back in the history. There were actually apartment buildings next to it, but they were all shut down, and I think they were impacted by a hurricane at one point, and then eventually just got torn down. And this one, part of it survived, uh, but you wouldn't have known that unless you went on Google Maps and looked
Right.
back at the history and seen that. And so it's very, very helpful tool for sure. That's just there. It's available.
Yeah. And knowing the geography of where you're at too, right? So I know that if I'm looking in Southeast Houston, that's all hurricane flood zone. So
Mhm.
you have to know what level impact that is. If you're looking in Oklahoma areas, well, when's the last time it was hit by a tornado?
Yep.
You know,
Yeah.
and things like
Yeah.
that. You have to really think about that and realize those things are out there. And Chat GPT is a great resource, because I've literally had someone tell me that a building living in Houston had never been hit by a hurricane in 12 years. And I pulled it up from its construction. It had been hit 14 times.
Oh my goodness.
No, it was still there, but that whole region had been hit 14 times. And there were billions of dollars worth of damage over that period of time for that whole area. And that impacts your insurance. Even if the building is structurally sound, it's still going to impact your insurance because it has a high risk area.
Yeah,
So those are
exactly.
important facts too.
Yeah. No, big facts there. Sweet. Any other tips, when it comes to looking at deals? Is it, criteria that you're looking at Google Maps? Is there any other, checkpoints that you use before you
So
even
I
dive in deep?
Yeah, because I usually don't, because the next level I usually would see would be the numbers, right? And
Hmm.
unfortunately, a lot of the numbers are inflated because of the way brokers are working right now. But um, when again, it's the geography of it, knowing that, looking at Google Earth, looking at the maps. You can also, if you want to go a little higher with, again, without looking at the numbers, you can go into crime statistics. You can get
Yes.
an idea of what the neighborhood's like really quickly, because it could be a beautiful property, but if it's a war zone around it, I don't care. You're not going to be able to get people in there hardly at all. And if you are, it's not going to be rent. It's not going to be rent you're going to expect to make on it.
Yeah.
So,
No,
and it may
exactly.
also, if you do buy the property, temper how you do your renovations, right? You're not going to go in with quartz countertops and everything stainless steel and everything. You're just going to use basic stuff if you're going to do that, because you can't, again, you can't put lipstick on a pig, right? And expect people to agree with it. They're going to know their neighborhood when they're moving there. The only people you're going to get in are people coming in from out of the area that don't know the neighborhood yet, but you're not going to keep them longer than one lease. So
Yeah. No, that's so true. That's so true. So those are awesome tips when underwriting, looking at deals is know your market and your criteria.
yeah,
And honestly, those are quick. I mean, those aren't quick, but it takes time to know your market, right? And set your
yeah,
criteria. But once you do, your process is a lot quicker.
way quicker.
So
Yeah.
taking that time to set up first for definitely helps. So transitioning into, you guys have a property. You've given us some, how you track trends to help manage that property. Is there any other things that you do uh, to just be a better asset manager for your property and make sure it's running efficiently?
So for me personally, with the property that we have currently, I get to listen to the calls. I don't get much input because, again, I'm new and they've got their in-house asset manager for the main partners and things like that. If I was taking on a property myself at this point and I was the primary asset manager, or at least the secondary, right, where I was learning the process to take over, my personal opinion is you should be on site during transition. And there's a big advantage to that. And I think you should be there no less than the first 30 days. And the reason I feel that way is because I hear time and time again asset managers having challenges with their property management companies and having to switch them out frequently, especially the first ones they bring in. And in my opinion, when you are there, boots in the ground, spending time with those people, learning their system that they're using to run the property, getting to know them well, getting to know the maintenance people, getting to know some of the contractors while you're there. I've always found that in no matter what business I'm in, again, because this is a relationship business, the better they know you, the far less likely they are to screw you over or
Mm,
overcharge you.
no,
They're going to be reasonable. They're going to throw flags up really quickly when something's coming and say, hey, this is an issue. And again, my response to that is if I'm not on site, I'm going. If there's a major issue, I'm going and I'm going to be there to ask, how may I help? Because
mhm,
from an asset management perspective, while I do manage the property management company, right, and I'm managing the process of running this business through until we sell it, it's because it is a relationship. I want them to be a collaborative team with me.
yes.
Where when I come there, they're actually excited for me to show up and spend time with them and learn, see what they're doing and see how good they're doing. And if there's area they can improve, well, I can ask them, well, how could we improve this? Rather than me coming in and telling them how to improve it, ask them first. And then if they're like, well, we don't know, we're frustrated, then you can offer your ideas, because you need to give them the opportunity, because they're there on the property. They know the tenants, they know the contractors, and you know, they're likely going to have the best solutions if you give them the opportunity. And if you come in and just bulldoze over everything they're doing, you're not going to do very well, in my opinion, because
Yes.
if you never visit the property, because I know asset managers that don't visit properties, especially during transition, and that doesn't make sense to me. Because if you're just another face on the other side of the screen, they don't know you, they don't care about you. You're actually kind of annoying to show up every week and find out what they're doing. You can just read the
Yeah.
reports. Why do I need
Yep.
to talk to you?
Yep.
You know, I want my weekly reports when I'm on Zoom being like, hey, how the kids? What are you doing? And then we'll get into the numbers. because I want them to know that I care about what's going on in their lives, because that's important. We all need to feel that way. We
Yeah.
all need to feel appreciated and respected in the jobs that we do, whether it's a W-2 or otherwise, so that we'll give back more. It's why I've been able to save 3 businesses for bankruptcy in the past. It was all people issues.
I 100%. I love that. I love that you pointed that out. It is people. It's a
Yeah.
people industry through and through. Yeah, there's a lot of numbers behind it. It's investment, but really it's people at the end of the
Yeah.
day. And
Yep.
I love that point with the property management company. A lot of people say, the only way to really do well is do a property management in-house. But I've heard some people, the really good asset managers, say, no, you don't need it in-house property management. It's about bringing in your third-party property management at a higher level to better communicate with them and build that relationship. Let them understand your business plan, and you work with them. And like you said, ask them for ideas, but collaborate. It's a team. They're a partner at the end of the day. And I think a lot of people um, sometimes will put too much trust in that and say, hey, run it, but they
Mm-hmm.
don't do the communication correctly. So they're
Right.
really not building the relationship there. They're more just handing it off. And I think you highlighted all the main points there. Is it comes down to your relationships with those people and the impact with
Yep.
that. And I think that's huge. And with that, I think this is perfect kind of pivot that I want to jump into is your whys, because I think there's a really neat that I want people to hear about is your company and your whys behind that.
Okay.
Because I think you just led right into this of just creating an impact for people, right?
Right. Yeah.
And not just people. We'll get that in a second, but let's jump into that. Let's jump into you have these two big whys, and so I want the listeners to hear that. I want to hear them as well,
Sure.
um, and jump into that. So yeah, go ahead. And, what are your two big whys that you're
Sure.
passionate
So,
about?
so I specifically have two very, very big whys, and Lenny aligns with this as well. But we want to eventually be in a position financially and experientially to go into very underserved communities that are D neighborhoods. We want to become the center of hope in our properties. And we want to teach these people how to be successful in their lives. And if that means putting in study halls, and I would like to, if we have the space on the property, put in local gardens, because I have connections through my horticulture background with the master gardener programs. And those people have to do community service to maintain their status. And I can't imagine any of them wouldn't love, if it's a safe and secure place to go, to teach people how to grow their vegetables and make sure their vegetable garden keeps going. So not only are we providing them an education, we're also providing them with fresh fruits and vegetables on the property. And it doesn't cost that much to help put it in. We talk about putting in dog parks and roofs and all this other stuff. This would be far more valuable in that space
Yes.
for those people than anything. And then with, like I think Lenny had said, providing, a space where there was free internet where they could use it. Because if they can't afford to have it in their individual units, there's kids still need to do research. Kids still need to do things. I would love to eventually have like a computer center where they can come. They don't even have their own computer. They can have a space where they can come and study and they can work. And I know that there's people in communities that would come in and volunteer to tutor the kids, because in my vision is that while I may not be able to save the adults in the situation that they're in, we can help rescue some of those kids and give them hope, because most children in those situations choose crime, or they end up in situations where they end up dying because of violence, gangs, drugs, whatever, because they don't have options, and we would love to go in and be able to start offering them better options, and making their lives better.
Yes. That's amazing. I love that. I love that. Essentially business plan, but creating an impact there in those neighborhoods
Yeah.
by using multifamily to do so.
Yep. Yep. Because most of these people are never going to be able to afford a home on their own. So they're going to be renting, and we want to be able to go in and fix up their properties, because I believe, and actually found an architect who also strongly agrees, that if you build them beautiful or renovate them nicely, that people treat them better. When they look like a project, they treat them like a project.
Yep.
And if if it looks like a prison, they're going to treat it like a prison. But if you make it really nice for them and make it so that they can enjoy it, they can take some ownership of it. And I even see that at the higher levels, right? Even in the B and C properties, if you build a sense of community within that community itself, rather than just being neighbors that they don't even know, it's going to be a lot more successful for you and for them, because you know the money that we're going to generate from this business for us and the wealth we're going to generate is a tool for us to
Yes.
be able to give back and do more for the community. And we would love to show how successful it can be. We've seen someone invest into a specific neighborhood outside of Orlando and had an incredible result. Went from like a 13% graduation rate to a 96% graduation rate in a year.
Wow. Wow.
Yeah.
That's
So
impact.
yeah, he knew exactly what he was doing, and he understood that hope was killing these kids, lack of.
Wow.
And I mean, their unwanted pregnancy rate went to almost zero. So I mean, it's when kids have hope, they have an opportunity to do more with their lives. And because I even don't even criticize the drug dealers and the gang members and things like that, because they did what they needed to survive in that environment, because they didn't see any other option.
Yeah. That's where they were at, and that's what they had to do
Yeah.
to move forward, to live through this, and um, do their own type of impact and purpose, right?
Yep.
For
And it's
sure.
very difficult to not have a slum mentality when you live in a slum. But if you can take the facility and make it beautiful and make it so that it's a place that they're proud to live in, then you're going to get a much different result, I believe. And I've even
Right.
heard some pushback from people that come from those communities, but my pushback to them was pretty solid too. And they were like, oh, they might actually accept that.
Yeah, and it's just putting the opportunities in front of them, right?
Right.
And
Right.
allowing them to choose that, and helping them shift their mindset. We're big on
Yep.
that, right? It
Yep.
is allow
Absolutely.
them to be in a better place to change their mindset about it. Oh, I love that. That's a
Yep.
huge impact. Okay, so now your other why, it
Our other
relates
why.
to your company name. So let's
Yes.
dive into that real quick.
Yeah. So Great Dane Capital came from the fact that Lenny and I have rescued 10 Great Danes together. We're now only have one currently, but our goal with that is that when we have the resources, we actually want to build a rescue for Great Danes that is self-sustaining, fully funded, paid staff, so that we're not struggling with volunteers. I even want to eventually have an emergency vet clinic attached to it. And then all of our people can come there to the vets. I mean, we can have the dogs taken care of, and it's a great investment opportunity, honestly. And it's also a great place with the foundation that we're eventually going to build for this as the tax write-off for our investors, right? Because typically people with Great Dane Capital, they like dogs. And if we're making them really good money, or when we're making them really good money, they're going to need write-offs. And I'm hoping that they will donate to our rescue and provide them the services they need. And again, I once again, another kind of center of hope, because I want to provide services for not only these dogs, but with the veterinary clinic, I want to be able to offer discounted services, to where we're not just in it for the money, to where we're really trying to help people keep their pets as long as possible and as healthy as possible without going into debt. So,
Yeah. Wow. That's so cool. I love that. And I love that you guys made your name Great Dane Capital, because then you're putting that purpose and that impact behind you, right?
yep.
Of always knowing we have a purpose and we have this opportunity to give back, and not just to people, but to the dogs, right? To the Great Danes.
Right.
I think that's so cool and special, to have that there and always in the back of your mind, with that. So thanks for sharing those. Now I want to jump into our think bigger questions. So we have three questions here. The first one is, how do you choose to think bigger?
Well, my big choice to think bigger is my long-term plans, right? I eventually even want to do affordable housing, mixed use construction for skyscrapers.
Wow. I love
I want to
that.
learn how to do that because I mean, there's such a need for housing in this country right now, and most of it is only geared towards the wealthy or the upper middle class when they're building new construction. But that's actually my goal right now is to start focusing on what it takes to do development and learning the resources that are out there from the federal government, local governments, state governments, things like that, that I can help utilize this and again benefit investors as well, because the fact that we usually end up in opportunity zones where there's no taxes. Our San Antonio property is a good example of that, right? It's a brand new build, but as long as we maintain 50% affordable housing according to HUD for that region, then we don't pay any property taxes for the life of that property. And so it would be awesome to, as far as I'm concerned, to keep that as a legacy property, or at least for a few years longer than what the
Yeah.
projected hold is, because it's basically going to be a cash cow for our investors, but it's also a really good help for the community in that space because of the affordable housing percentage. And it's a resort. It's beautiful property,
Yeah.
and there's no reason why you can't build a beautiful property and make it affordable.
I love that. Oh, that's great. That's definitely great. I love the development space for sure. I think that's really neat. Okay, so second question, how do you define success?
Continuing to move forward, right? Because if you just run into a stumbling block and you stop, you're not going to be successful just stopping. And I'm guilty of it. I'm
Yep.
guilty of getting overwhelmed and just shutting down and not wanting to move forward on stuff. But my successes are the 1% every day, trying to do a little bit more every day and moving forward. And my ultimate success is when people start to copy what we do.
Mm, wow. Wow, that's good. I love that first off of just moving forward every day. Just
Yeah.
just keep moving forward. That's
Yeah.
that's a success. If you're moving forward, that's successful. That's being successful, right? It's moving forward every day. And then that last part, when people start copying what you're doing, you're doing something right.
Yeah. Yeah.
Or I mean, could be something bad, but let's hope it's something good, right?
On our side, it should be something good, right?
Yeah,
So
yeah, yeah,
that's our goal, is we're going to have to, positive impact in those communities. And if for example, like I said, we become a center of hope in a community and people see that we can do this and be successful, because there's been so many failures in government programs. And if we can show that private industry can come in and do this and fix things, I know there are a lot of wealthy people and people in general who would donate to an organization that's trying to help people out of situations, because a lot of people want to blame the poor for being in their situation, but I've been poor. I've been very, very
mm,
poor. And that was never my choice. It
yeah,
was never my choice. And it's very hard to get out of. And then once you get in that mindset, it's even harder. So unless you have someone to take you by the hand and lead you to success, who are you going to learn from? You can't learn from the people around you who are also failing.
yeah, yeah,
So if again, that's my goal, is to be the center of hope, and that other people grab onto that and start using the same model.
yeah. And that can be very powerful. And it's a struggle to get out of that,
Yep,
but that could be very powerful to put that change in there and change that mindset. And the mindset
absolutely.
is the biggest piece to it. Like you said, putting that hope. That's
And I tell Lenny all the time, one of the advantages I see is if you're investing into that community, there are brilliant children in those communities that don't get access and don't get this opportunity.
yes,
And if you give them that opportunity and they become a successful young adult and they get through school and they have a business idea, well, by the time I can afford to do this and they've got a business idea, they come to me with a business plan. They can utilize my resources and my knowledge and my expertise and my money, and we will start a business together with them, and they can run it, and I'll be a 50% partner with them. They're not going to get those kind of offers from the bank,
yeah,
because again, they're coming from a disadvantaged community. It doesn't matter how smart you are, if you don't have the tools, you still can't move forward.
yep,
And I want to be able to just build on that, not just give them good housing. I want to give them paths to success. And then my only caveat with all of them will be is you need to reach back and help other people.
yes, yeah. Which they probably will. That's probably the
Yes.
businesses they're starting as well. So it's
Yeah.
a domino effect.
Yeah.
I love
Because it'll
that.
benefit them just as
Yep.
much to do the same thing I did, reach back and help someone else and pull them forward. Because again, as long as you learn, it's no different than buying any business, right? You vet the business properly and you know it's a good product or a good service, and you've got a good person that's standing in front of you doing a good job, or you know they can do a good job with the right support. That's not that risky.
Yeah. Yeah. I love that. And that's what I feel like is entrepreneurship, honestly, is you take one step forward and you turn around and you hold your hand out for the next person up,
Yep.
even if you're not very far along at all. Right. So I love that about you guys. Now, last question here is, what is the best advice you can give a new multifamily investor, a new student, someone that's just learning in multifamily? What's some advice you can give them?
Ooh. You will get frustrated, but keep moving anyways. You will. This is a business. Anybody who's doing this today that thinks they're going to be quitting their W-2 in 3 months, I got a shocker for you. That's probably not going to happen. But if you look at it from the perspective that you're building a business from the ground up, that's your business. No bank, if you borrowed money from them to start your business, would expect you to be profitable in the first 5 years. If you go from that perspective and understand that you are going to be working your W-2 and this while you're building your business, you'll be successful. If you just think you're going to walk away from everything and just do this full time, you're going to be in for a rude awakening. But this is a great opportunity. There are opportunities there. The market has shifted. It has changed. It's slowed down, but market cycles come and go. So we're, headed into a buyer's market. We're not far from that at all with all the people who didn't underwrite conservative enough,
Yeah.
for the shift in insurance that they didn't expect. No one could have expected that huge shift in insurance in those sunshine states. No
No.
way.
No.
No one could have ever predicted you could double and triple your insurance in 1 year and be allowed to by the government.
Crazy. Yeah.
Yeah.
No, definitely. I love that. And that was kind of how you define success, right? Is just keep moving forward, right?
Yep.
Keep
Yep.
moving forward. You're gonna hit roadblocks.
Yep.
Keep moving forward. Listen to the Multifamily Mindset podcast. Listen to these stories. Listen to Dallas Pruitt and his mindset principles, and get your head in the right place to continue to push forward. And I
Yep.
think, yeah, go
And I would
ahead.
say find your place of peace, right? Sometimes
Mm,
the days are going to get overwhelming. And if anybody follows me on Facebook or Instagram, you'll see my sky pictures. I'm laying on the ground out there looking at the sky because I'm dealing with overwhelm and I need that
mm,
peace. So it's my centering time. You need to allow yourself that centering time when you start to get overwhelmed, because otherwise it'll just run over you like a waterfall.
yep.
So,
Yep. Oh, it's perfect. That's great. Chad, this has been awesome. I want to recap real quick of some key points that we were able to pull out. First off, we talked about some tips and tricks when it comes to market research and your criteria. When you're underwriting a deal, know your market, know your criteria, and that's going to speed up your process so much faster. And there are some tools in that. If you miss those tools, rewind it and listen to it again. Other piece is, this is a relationship business, about building relationships with people, and that leads into this third point, is creating an impact. Create an impact in people that are around you, and that you work with, the partners that you create, property management companies, the tenants, people just around you in your circle. And also, the other piece of creating impact is be impact driven, I think, is a big piece, because that drives your purpose. And your guys' company of Great Dane Capital and trying to help dogs as well, and creating that community and impact is big. So I would take from that is just create impact, be impact driven there. So with that, Chad, I've loved talking to you today, and I know our listeners have taken away so much. I know I've learned from you and what you do in this business. And I know you and Lenny are just going to persevere and do so much, and you're going to accomplish your whys, because I've seen you guys put in that effort all these past 2 years. And so I appreciate you coming on. We do have your links. So anyone that wants to connect with you, look in the show notes. You'll find Chad's links in there to connect with him. And if you like this episode, you felt impacted, you want to share this with others around you, like it, subscribe, let people know. so you can help start creating that impact on other people's lives.
Yep. Thank you very much, Zach. I appreciate the opportunity.
Awesome. Thanks, Chad.
All right. Have a great day.
Multifamily Mindset.
Podcast. Think bigger.